Welcome to the deep dive. This is where we take a whole stack of source material, articles, notes, you name it, and really try to carve out the most important knowledge, the surprising insights specifically designed for you.
Especially if you're tackling something as huge as the Indian economy, maybe for something demanding like the UPSC exam.
Exactly, that feeling of trying to drink from a fire hose. We know it well.
Right.
And our goal really is to be your guides through this specific set of notes you've shared. They cover, well, pretty much the whole gamut of the Indian economy.
That's right. It's comprehensive stuff. Starts with the real foundations like land and agriculture, moves through industries, services, infrastructure.
And even India's place in the global economic picture.
It's a vast, interconnected landscape, and our mission is really to help you navigate it.
Effectively, yeah. We want to cut through the noise, pull out those key nuggets, show you how things connect.
And maybe most importantly, help you understand why these details, well, they really matter for your UPSC preparation, right?
Exactly. We'll point out the patterns, the policies, the sticky challenges, and the opportunities that are all kind of baked into this material.
So think of this as maybe a way to get a more structured understanding. You'll come away with key facts, specific examples, and hopefully a deeper analytical view.
Yeah, by the end, you should feel a bit more confident tackling these complex areas in your studies.
Let's hope so.
So consider this your strategic shortcut, maybe, to getting up to speed on these vital economic topics for those UPSC goals. Okay, let's unpack this material together.
That was good.
We're going to start right where the source material begins, which makes sense. At the absolute foundations, with something historically just central to India's economy, land reforms and agriculture.
Yeah, the notes really dedicate a lot of space to this, and for good reason.
Foundational importance, right?
Absolutely. Post-independence, sorting out the deeply entrenched inequities and inefficiencies in land ownership, that was critical. The old systems like zamindari, they just concentrated land and power, often exploiting the actual cultivators.
So these early land reforms, they weren't just about handing out land, but fundamentally changing that whole relationship.
Very easily. The source material lists the key objectives quite clearly. First and foremost, abolishing those exploitative systems, getting rid of the intermediaries like zamindars.
Okay.
Second, the goal was distributing surplus land, any land held above a legal ceiling, to the landless poor and other weaker sections.
And crucially, providing security for those who actually work the land. That seems absolutely vital.
Absolutely vital. That was the third objective. Security of tenure for tenants. This often meant, documenting their rights, sometimes even granting them ownership over land they'd farmed for generations.
Right.
And then there were policies to fix rent. The source mentions around 25–33% to protect tenants from, well, arbitrary demands.
I can see how that security would be a powerful motivator. If you know the fruits of your labor aren't just going to be snatched away, you're more likely to invest, right?
Exactly. That's the idea. Abolishing intermediaries, securing tenancy, land ceilings. It was all meant to give cultivators a real stake, incentivize them to invest their work and resources into improving productivity.
Okay, so beyond the broad policy strokes, the source highlights some specific efforts, like Operation Barga in West Bengal. What made that one stand out?
Operation Barga, yeah, that was a big one. Launched in 1978. It was a really focused drive to register sharecroppers, the Bargadars, a massive effort to actually document the rights of these often informal tenants.
So formalizing their position.
Exactly. Registration gave them permanent occupancy rights. They couldn't just be kicked off the land easily. And, importantly, heritable rights, so their children could continue. It also set out the crop division, usually 1.3 landowner to sharecropper. It provided security that just wasn't there before for millions.
And then you have the Bhudan and Gramdan movements. These were non-governmental, led by Vinoba Pave. How did they fit in? A different approach, wasn't it?
A very different, unique approach. Bhudan started in '51, inspired by landless communities in Telangana. Behave used nonviolence, walking village to village, persuading wealthy landowners to voluntarily donate land, Bhudan, land gift for the landless.
A moral appeal.
Yes. And Gramdan went further, aiming for voluntary village-level community ownership. Now, the actual land redistributed was, much less than through state policies, but these movements were really significant for building social awareness about land equity. They complemented the state's efforts in a way.
Okay, moving forward to more contemporary times, the source brings up modern legal frameworks. The Agricultural Land Leasing Act of 2016 that seems to tackle the reality of informal leasing.
That's a key point. Informal leasing is super common, right? People need land to farm but don't own it. But old laws sometimes discouraged formal leases because owners feared tenants might eventually claim ownership.
Right, the security of tenure issue again.
Exactly. So the 2016 Model Act tried to create a secure framework protecting the owner's title while ensuring the tenant's rights for the lease period. The source sees potential here, transforming agriculture, improving livelihoods, but stresses, and this is crucial, the need for effective implementation by the states.
And alongside this, there's the Prohibition of Benami Transactions Act, 1988. How does tackling Benami property relate to land reform?
Well, a Benami transaction is basically when property is held in one person's name, but someone else actually paid for it and benefits from it. It's often used to hide illegal money, evade taxes, that sort of thing.
Laundering through land.
Right. So the Act aims to curb this. By cracking down on Benami deals, it brings more transparency to land ownership, making it harder to stash illicit wealth and property. It's indirectly related to land reform by helping ensure records reflect true ownership and preventing land from being used for illegal stuff.
Transparency, that word keeps coming up. Which leads us straight to the digitization of land records. This feels like a really fundamental modernization push.
It absolutely is. The whole point is to create land records that are accurate, easy to access, and importantly, guaranteed. The program, initially NLRMP in 2008, then redesigned as DLRMP in 2016, it's a central sector scheme run by the Department of Land Resources.
And the goal is?
Reduce disputes, definitely. Improve access to credit for farmers, using land as collateral. Make government schemes run smoother. And looking ahead, it's seen as essential for facilitating things like land consolidation efforts.
But despite all these policies, movements, tech initiatives over decades, the source is pretty frank that land reforms haven't been a complete success story. What were the main roadblocks?
Yeah, the source uses words like tardy and slow. It points to inadequate implementation capacity, bureaucratic hurdles, corruption maybe, but crucially, a lack of sustained political will is often cited.
Vested interests pushing back.
Often, yes. Land reforms can challenge powerful interests. Without strong, consistent political backing and proper oversight, implementation just falters.
And this leads to a really significant social consequence mentioned. Migration linked to land problems. How does that connection work?
It's quite direct, actually. If reforms are patchy or getting clear titles is a bureaucratic nightmare, farmers feel insecure. Why invest if your hold on the land feels shaky?
Makes sense.
Plus, even with redistribution, holdings are often tiny. If farming those small plots doesn't bring in enough income, especially with uncertain productivity, well, people look elsewhere. Particularly younger people might seek non-farm jobs, often migrating to cities. It's complex, fuels urbanization, but can leave rural areas weaker.
Okay, so that's the groundwork, land ownership, access. Now let's zoom in on agriculture itself, the practices, the policies, the current state of play. Let's unpack the current scenario.
Right. Looking at today, Indian agriculture is, in many ways, a global giant. The source throws out some impressive stats. We're #1 in milk production globally, a huge 24% of world output. And that saw a massive 51% jump between 2014 and 2022.
Wow, that's really significant growth.
It is. We're also the second largest producer of food grains, fruits, and vegetables globally, second biggest exporter of sugar too, and in fisheries, third largest fish producer, second aquaculture. So the scale and diversity are just immense.
The data on operational land holdings from the 2015-16 Ag Census, that really tells a story about the structure of farming, doesn't it? What's the headline?
The headline is definitely increasing fragmentation. The number of farms went up from about 138 million to 146 million between 2010 and 2015, but the total area farmed actually decreased slightly.
So more farmers, slightly less land, smaller plots per farmer.
Exactly. The average farm size shrunk from 1.15 hectares to just 1.08 hectares. That's really small on average.
And the distribution is skewed.
Very skewed. Small marginal farms less than 2 hectares make up a staggering 86% of all farms. But they only operate about 47% of the land. On the flip side, large farms, 10 hectares plus, are less than 1% of the farms, but control over 9% of the area.
And this dominance of smallholders is absolutely key for understanding policy challenges, isn't it?
It's fundamental. Policies designed for large, mechanized farms just won't work for the vast majority here. Small size limits, scale economies, makes big machinery investment tough, restricts crop choices, impacts market access. It's the core challenge many initiatives have to grapple with.
Okay.
Though the source does note a positive trend, the share of female farmers increased slightly, from about 12.8% to almost 14%.
Given that structure, what kind of government initiatives are trying to tackle these specific smallholder challenges?
Well, besides the land records digitization we mentioned, which helps with clarity, there are things like the Farm Machinery Bank scheme that helps groups of farmers access shared machinery on subsidy, making mechanization more viable for small plots.
Sort of like a co-op model for tractors.
Kinda, yeah. And to tackle low productivity and inefficient resource use, there's the Soil Health Card scheme. Free soil testing, tailored advice on fertilizers and water based on your soil's needs. The aim is more precise, efficient input use.
Now, thinking about what farmers actually grow cropping patterns, what influences those choices and how are they changing?
Lots of factors. Obvious ones are rainfall, climate, soil type, but also technology access, irrigation, and, like we just said, farm size really matters. Small plots limit options.
Right.
The source notes a big shift over time, moving away from just growing food grains towards more cash crops. Think sugarcane, cotton, especially noticeable in places like Maharashtra and Punjab.
But sticking to just one or two crops, that brings its own problems, right? The source talks about diversification.
Yes, it mentions monoculture woes. Growing the same thing over and over, especially staples like rice and wheat, can deplete specific soil nutrients, make crops more vulnerable to pests needing more chemicals, and leave farmers exposed if the market for that one crop tanks or the weather hits it hard.
So diversification is healthier for the soil and the farmer's bottom line.
Pretty much. Different crops replenish different things in the soil, helps prevent erosion, fosters good soil microbes, and it spreads the farmer's risk.
One huge intervention in India's agricultural past was the Green Revolution. What was its core impact and focus?
The Green Revolution, starting mid-60s, was all about technology. The core was introducing high-yielding varieties, HYVs, of seeds, mainly wheat and rice initially. The source mentions how low yields were back then compared to elsewhere, and highlights scientists like M.S. Swaminathan adapting these seeds for India.
And it wasn't just the seeds, was it? It was a whole package.
Absolutely, a package of practices. HYV seeds needed more chemical fertilizers, pesticides, and crucially reliable irrigation. That's why its impact was geographically concentrated. Punjab, Haryana, Western UP, areas with good irrigation. While it focused on a few crops at first, the impact was huge. Massive production increase, achieving food self-sufficiency, widespread adoption of packaged inputs, and expanding farmed areas in those key regions.
Beyond the staples, horticulture seems to be a growing area. The source highlights its potential.
Horticulture, fruits, vegetables, flowers, spices, yeah, it's a fast-growing sector. Offers potential for higher incomes than traditional crops, creates a lot of employment.
What are the opportunities there?
The source points to things like adopting modern tech precision agriculture, for instance, adding value through processing jams, juices, drying, developing good cold chains to cut down spoilage, which is huge for perishables, and building strong brands for quality Indian produce internationally.
And is the government backing this?
Yes, mainly through the Mission for Integrated Development of Horticulture, MIDH. It's a centrally sponsored scheme from 2014-15, provides funding for infrastructure, tech, market access, training. The funding split varies, mostly 85.15 center.state, but 100% central for any Malayan states. Plus, other schemes for skills and Kisan credit card access for horticulture farmers.
Okay, switching from what is grown to how it's grown, farm mechanization, critical for efficiency, right? How's India doing there?
Mechanization using machinery brings big benefits. Better use of inputs like water, labor, energy, fertilizer. Timely operations, which is key for yield. Quicker crop rotation. Overall, higher productivity and income.
And the government's pushing it.
Yeah, through the Submission on Agricultural Mechanization, financial support for buying machines, setting up custom hiring centers, recognizing not everyone can buy their own tractor, right?
But our mechanization rate still lags behind.
It does. The source cites an eco-survey from 2019-20 putting India's rate around 40-45%. Compare that to the U.S. at 95%, Brazil 75%, even China at 57%. So there's a long way to go. Mechanization is apparently highest for preparing the seedbed, and wheat is the most mechanized crop. Lots of scope for improvement across other tasks and crops.
The source really stresses the importance of the seed sector. Why is seed considered so fundamental?
It's often called the most vital input because the performance of everything else, fertilizers, water, pesticides, really depends on the quality and genetic potential of the seed you start with.
Right.
The source reckons quality seed alone contributes 15-20% directly to production and maybe up to 45% when combined with good management of other inputs. It's a sector that's seen huge development, with bodies like the National Seeds Corporation, set up back in the 60s, playing a key role.
It also mentions seed certification and trade policies briefly.
Yeah, it outlines the steps for certification ensuring quality and purity. On trade, it mentions the EXIM Policy 2002-07, noting some restrictions on exporting certain feed types, needing specific agencies like TriFed or NAFED for some exports, registration with EPIDA, and DGFT involved in licensing, just giving a flavor of the regulations.
A more complex, often debated topic is genetically modified GM crops.
Oh.
What examples and regulations does the source discuss for India?
The big one in India is Brint cotton, approved back in 2002. It has a gene from a bacterium, Brincott, giving resistance to the bollworm pest, cutting insecticide use. Some versions also have herbicide resistance.
Okay.
Brinjal for pest resistance is mentioned, but its commercial release is still on hold due to opposition.
Yeah.
And DMH11 mustard, developed by Delhi University, is mentioned as herbicide tolerant.
What are the main criticisms or concerns about GM crops that the source points out?
Several things. Potential for herbicide resistance in weeds, leading to more weedicide use. Dependency on multinational corporations who own the tech, geopolitical concerns there, some cultural or religious opposition viewing them as unnatural, and practical issues like lack of clear labeling and public awareness.
And the regulation.
The main body is the Genetic Engineering Appraisal Committee, GEAC, which approved GM crops. The source also flags the Environmental Protection Act, which has serious penalties, prison time, fines for unauthorized GM crop cultivation, showing a strict regulatory stance.
Circling back to the soil health card scheme, the source suggests that just having the scheme isn't enough. Its real-world use needs work.
Yeah, the idea is good, tailored advice. But the source says it needs better awareness campaigns, especially before planting. Also suggests dedicated monitoring bodies to track implementation and outcomes. And importantly, actually showing farmers the benefits through block-level demonstrations. Practical proof.
Let's talk about agricultural labor, a huge part of the workforce. The source traces its origins and ongoing issues.
The source links the rise of a distinct landless labor class, partly to the cash cropping pushed by the British. Uplifting them was an objective in early five-year plans, but NSSO reports show their numbers grew over time, partly because non-farm rural jobs didn't grow fast enough.
And the challenges they face are persistent.
Very much so. Exploitative practices, low bargaining power, leading to low incomes, a big driver of rural poverty, chronic seasonal unemployment or underemployment. Plus, many come from marginalized social groups, facing additional issues like debt and social disempowerment. It's a tough reality for millions.
Irrigation fundamental, but the source warns of a crisis and pushes for efficiency.
Yeah, the reliance on groundwater is huge and often unsustainable. There's a big gap between potential surface water and what's actually used. Add declining per capita water availability, scary rates of groundwater depletion, low efficiency in traditional irrigation. It points towards a crisis if things don't change. Droughts just make it worse.
So the push has to be towards changing practices, using different tech.
Exactly. Urgent need to shift to water-saving tech, especially microirrigation like drip and sprinkler systems that can be up to 90% efficient. Using canal water better, investing in rainwater harvesting and storage. Also, smarter crop planting, choosing crops suited to local water levels. And being mindful of virtual water trade, the water embedded in exports. Plus, just making farmers more aware of existing water-saving schemes.
Can you quickly outline drip and sprinkler?
Sure. Drip applies water right at the roots, saving 30–50% water. Very efficient, reduces weeds, saves land, can boost yield. Downsides. Higher initial cost, needs skilled maintenance. Sprinkler sprays water. Good for most soils except heavy clay. Also saves water versus flooding.
Yep.
Downsides. Less efficient and high wind temps. Potential long-term soil issues if mismanaged.
And the big government scheme pulling this together is PMKSY.
Pradhan Mantri Krishi Sinchay Yojana, yeah. Launched 2015, brought various schemes under one umbrella. Main goals: expand irrigated area, improve water use efficiency. The slogan is more crop per drop. It involves coordinated planning across ministries, overseen at the top level.
Moving from water to soil, nutrients, fertilizer management. Challenges like high subsidies, nutrient imbalance.
Those are key. The subsidy bill is huge, and overuse of urea, nitrogen, has skewed the NPK ratio in soils, hurting health and productivity. Suggestions in the source: rationalize subsidies, maybe make them more targeted, decanalize urea imports, policy to boost domestic production, maybe extend the nutrient-based subsidy, NBS, which applies to non-urea fertilizers, now to urea, to encourage balance, promoting organic farming too, and using tech, space tech, soil cards, digitization for better management.
Organic farming is presented as a sustainable alternative.
Right. defined as using biological fertilizers, pest control from natural sources, avoiding synthetic chemicals, advantages mentioned, more economical for farmers, no costly chemicals, good ROI, high demand domestically and globally, export potential there.
Access to finance is another huge piece. How is agricultural finance categorized?
Usually by tenor. Short term, up to 15 months, for crop needs, seeds, fertilizer. Medium term, 15 months, 5 years, for tools, machinery, small improvements. Long term, over 5 years, for big investments like land development, major machinery, often from specialized banks like cooperative agriculture and rural development banks. Also categorized by purpose. Productive for farming versus consumption, household needs, with moneylenders often involved in both, sometimes exploitatively.
And NABARD is the key institution here.
Yes, NABARD, National Bank for Agriculture and Rural Development, is the apex body. It funds rural institutions, helps rehabilitate them, provides training, liaises with government. Crucial credit facilities include the Rural Infrastructure Development Fund, RIDF, for public infra projects, the Kisan Credit Card, KCC, for easy farmer credit, and the Microcredit Innovation Scheme, MCIS, for the rural poor via self-help groups.
Protecting against crop loss agricultural insurance, how has that evolved?
It's come a long way. Early schemes had limitations. The Comprehensive Crop Insurance Scheme, CCIS, from late 90s was a step up. Then came pilots like the Modified National Agricultural Insurance Scheme, MNAIS, and the Weather-Based Crop Insurance Scheme, WBCIS, which linked payouts to weather data instead of just yield loss.
And these led to the main current scheme, PMFBY.
Pradhan Mantri Fasal Bima Yojana, exactly, launched 2016, replacing the earlier ones. Aims: support production, stabilize farmer income, promote modern farming, ensure credit flow. Key features: low farmer premiums, 2% Kharif, 1.5% Rabi, 5% commercial horticulture. Initially mandatory for loanees, now voluntary for all since 2020. It's a huge scheme, big budget allocation. PMFBY 2.0 in 2020 aimed to streamline claims.
What are the challenges in rolling out something this massive?
Scale and diversity are huge hurdles. Reaching millions of small marginal farmers is complex. Using area-based loss assessment isn't always accurate at the farm level. And it needs smooth coordination between insurers, state guilds, banks, local bodies. The source mentions a land record web portal could help link insurance data to specific plots for better tracking.
Contract farming, another way to link farmers to markets. How does that work?
It's basically a pre-harvest deal. Farmer agrees to grow a specific crop, certain quantity and quality, for a buyer, like a processor or retailer, who agrees to buy it at a set price or formula.
What are the potential upsides for the farmer?
Reduce market risk, you have a buyer, often a known price. Better access to inputs, tech, advice from the buyer, sometimes financial advances. Can promote value addition, quality control, income diversification.
But downsides too. Challenges.
Definitely. Power imbalance is a big one. Small farmer versus big company, contract disputes, quality disagreements, delayed payments, logistics issues. And if market prices shoot up after you've locked in a price, you lose out. The source suggests strengthening the rules. Implementing the Model Contract Farming Act 2018 adapted locally is key. That act aims to help farmers' FPOs link directly with companies, cut out middlemen, improve market access, and give small farmers more bargaining power.
Moving beyond crops, animal rearing, and fisheries, their contribution isn't just food, is it?
Not at all. Besides meat, milk, eggs, fish, they provide materials like leather, wool, bones. Manure gives energy, biogas, and fertilizer. Animals provide traction, transport. They even help manage waste using crop residues or food waste as feed.
And government support for value addition here.
Yes, schemes for bovine breeding, dairy development. Operation Flood the White Revolution is highlighted as transformative, creating co-ops like Amul, boosting milk production hugely thanks to leaders like Patel and Kurian. Objectives are increasing processing, diversifying products, getting better prices for producers, ensuring quality for consumers. Similar push under the Blue Revolution for fisheries.
The food processing industry, FPI, seems like a critical link. What's the context?
The source defines unprocessed, minimally processed food. It notes that India produces a huge amount of food, over $400 billion worth annually. But the level of processing is quite low compared to potential.
Why is boosting FPI seen as so important?
The benefits are huge and tackle core agri-problems. It can drastically cut post-harvest losses, the source says over 30%. Creates jobs, especially rurally, potentially slowing migration. Adds value to produce. Improves supply chains, food safety, quality. Boosts export potential.
What's holding it back then? The challenges?
It's a long list. Across the whole chain. Supply side. Fragmented farms, low productivity, perishable raw material, huge gaps in cold chain infrastructure causing those big losses, inefficient supply chains, infrastructure gaps generally, storage, transport, power, tech and skill gaps, complex regulations, limited finance for small processors, poor market linkages between farmers and processors.
The government has flagship schemes here, like PM Kisan Sampada Yojana.
Yes, Sampada is a major central sector scheme under MOF-PI. Big budget, aims to cut losses, add value, create jobs, boost FPI overall. It funds things like mega food parks, cold chains, processing clusters, backward-forward linkages. Then there's PMFME, focused specifically on micro units, helping them with credit, training, marketing, often cluster-based. And Operation Greens, initially tomato, onion, potato, now expanded, focuses on supply chains and processing for specific crops.
Food Safety FSSAI is the key regulator.
FSSAI, yeah. Food Safety and Standards Authority of India. Sets standards, licenses businesses, does surveillance, testing, supported by scientific panels. The source also mentions Codex Alimentaria's international food standards for health and fair trade.
And TriFed and MPETA focus on specific product marketing.
TriFed helps tribal communities market their products, handicrafts, forest produce, organic stuff, connecting them to markets. MPETA promotes marine product exports, focusing on quality, traceability, market promotion, infrastructure for the fishing sector.
The source mentions a specific act for marine fisheries regulation.
Yes, the Marine Fisheries Regulation Management Act 2019. Key features: nationalizes the EEZ, exclusive economic zone, keeps foreign vessels out, regulates Indian vessels, promotes sustainable practices, mesh size, seasons, catch limits, supports conservation, marine protected areas, bans destructive methods.
Commodity boards also play a role for specific crops.
Right, examples given are coffee board, rubber board. Statutory bodies, often under Ministry of Commerce. They handle R&D, extension services, quality control, market analysis, promotion, sometimes labor welfare for their specific commodity.
Agricultural exports, India is a player but faces hurdles.
Big player, yeah.
Yeah.
Second largest sugar exporter mentioned. But competitiveness needs work. Challenges: lower productivity quality sometimes versus global standards. Poor post-harvest transport infra adds costs. Logistics burden is high. Lack of market intelligence, global links for many exporters. Limited finance insurance for export production.
What initiatives are listed to help boost exports?
Things like traceability portals, safe food export traceability, a one lab, one assessment portal for quality checks, monitoring export alerts, a PETA schemes, the National Program on Organic Production and POP for organic exports, Agri-Udan, mentoring startups, APETA improving cargo handling, National Monetization Pipeline is listed too, may be linked via infra improvement.
The role of women in agriculture is strongly highlighted.
Absolutely. Studies show investing in women farmers boosts yield 20 to 30%, improves family nutrition health, helps rural development, poverty reduction, economic growth. Their presence is huge. 80% rural women depend on agri, 33% are cultivators, 48% agri-laborers. Their contribution goes way beyond field work.
Agricultural extension services connecting research to farmers, how can they be better?
They're vital bridges. Improvements suggested: tailor services using participatory methods, use tech, apps, digital platforms, remote sensing for wider reach, strengthen public-private partnerships, NGOs, companies, FPOs, promote sustainable practices like climate resilience, and crucially, address gender inequality so women farmers get equal access.
And e-technology is seen as a direct aid to farmers.
Yes, promoting ICT adoption for digitally empowered farmers. The Digital Agriculture Mission 2021-25 aims to use AI, blockchain, drones, etc. to transform the sector, improve income, productivity, sustainability. Promoting FPOs is part of this, helping farmers with inputs, markets, bargaining power.
The source lists several committees related to agriculture. Why mention these?
Listing committees like Mohan Singh Mehta, KVKs, Kilkar, Fertilizer Subsidy, Swaminathan, MSP, Ramesh Chandra, Food Policy, Meena Kumari, Fishing. It shows you the policy evolution. Helps understand how thinking on specific challenges has developed over time. Useful for context in your UPSC prep.
Subsidies in agriculture, a complex area. Direct versus indirect?
Indirect subsidies are things like cheaper water, seeds, power, fertilizer. Advantages mentioned: promote teaching for quality inputs, behavior change like diversification, training, food security, maybe contain migration. Disadvantages: can distort markets, influence prices artificially, maybe discourage private investment.
And direct subsidies mean cash transfers?
Yes, like PM Kisan, Pradhan Mantri Kisan Samman Nidhi. Central Sector Scheme from 2019, 6,000-year direct income support to landowning farmer families, initially small marginal, now all landholders, with some exclusions for the affluent. Paid in 3 installments, Big Reach estimated over 15 crore farmers.
There's a debate. Loan waivers versus income support like PM Kisan. What's the source's take?
It positions PM Kaisan as a shift towards direct income support, argues loan waivers treat the symptom, debt, not the root causes, climate, markets fragmentation. Cites concerns about limited reach of waivers, NABARD finding only 50% eligible got benefits, and sustainability credit discipline issues, EcoSurvey. PM Kisan framed it as maybe more sustainable, equitable income support.
The overall subsidy picture involves big spending and criticism.
Huge spending, 6 lakh CR, 2% GDP in FY23, cited from EcoSurvey. Also notes massive loan write-offs due to waivers, 7 lakh CR 2017-21 RBI data. Criticisms, inefficient resource use, overuse of fertilizer, water leading to environmental damage, and subsidies often benefit large farmers' agribusiness more than the small farmers who need it most. Again, that NABARD waiver finding.
Proper food storage essential to avoid losses. Types and consequences.
Main types: warehouses, FCI, CWC networks, for non-perishables like grains. Cold storage, NHB incentives, vital for perishables, fruits, veg, dairy. Consequences of poor storage: huge economic loss from spoilage infestation, financial ruin for farmers, health hazards from contamination, environmental impact from waste, supply chain chaos, scarcity, price spikes for consumers.
Which brings us to food security. Still a concern despite production levels.
Yes, a critical concern. Factors: poverty limits access even if food is available. Unequal distribution bypasses the vulnerable. Food wastage is significant. Malnutrition persists, sometimes hidden hunger, enough calories, not enough nutrients. Urbanization shifts diets too.
The National Food Security Act, NFSA 2013, is the main legal framework.
NFSA aims to provide food nutritional security via access to quality food at affordable prices. Creates a legal entitlement to subsidize food grains for priority households via PDS. Challenges: targeting errors, inclusion-exclusion, storage and for issues at FCI, rising financial burden on government due to the subsidy cost.
Revamping the PDS has been a focus.
Yes, to improve efficiency, transparency, accountability, measures, digitization, eliminate ghost cards, Aadhaar linkage, better targeting DBT, automation, EPOS devices, transparency portals, SMS, citizen vigilance committees. One nation, one ration card is a big step for portability. Smart PDS is a specific tech modernization scheme.
And PM Garib Kalyana Anna Yojana, PMGK, was a crucial COVID response.
Absolutely. Started during the crisis, provides free food grains, 5 kilograms rice wheat per person month on top of NFSA entitlement. Crucially important during lockdowns, now extended for 5 years from Jan 2024. Covers all NFSA priority households, a vital safety net.
ICDS and midday meal, PM Pyoshan, target kids and mothers.
ICDS is comprehensive for 0-6-year kids, pregnant, lactating mothers. Supplementary nutrition, immunization, health checks, referral, preschool ed, health nutrition education. Nutrition provided as hot cooked meal steak home ration. Midday meal, now PM Pyoshan, gives free school lunch, class 1 out of 8. Aims: improve nutrition, boost attendance, address malnutrition affordability. Seen as very effective.
And Saksham Anganwadi and Poshan 2.0 is the newer integrated approach.
Yes, Mission Poshan 2.0 combines Poshan Abhiyan, Anganwadi services, scheme for adolescent girls, focuses on malnutrition in 0-6 years, pregnant lactating mothers. Represents a shift toward transforming the whole nutritional ecosystem, not just food provision.
Okay, we've laid a really solid foundation with land, agriculture, food security. Now, let's shift gears. We need to look at the secondary and tertiary sectors, industry and services, and the absolutely vital infrastructure that underpins everything.
Right, this shift is crucial for understanding India's modern economic structure. Moving from the primary sector, agriculture, mining, to secondary manufacturing and tertiary services, finance, communication. The balance between these has changed dramatically over time.
India's industrial policy journey has seen some major twists and turns since independence. The source walks us through this.
It starts with the industrial policy of 1948. Basic goals: stability, creating an investment climate. It set up a mixed economy space for public and private, but wanted majority Indian control over foreign capital.
Then came the more state-dominated IPR 1956, linked to Mahalanobis.
Yes, the Industrial Policy Resolution 1956 really entrenched state-led development. It classified industries. Schedule A, 17 industries, was exclusive state monopoly defense, atomic energy, heavy industries, rail, power, etc. Schedule B, 12 industries, state-led but private could supplement. Schedule C was private sector but under state planning. The thinking was the state had to drive rapid industrialization, especially in heavy strategic areas.
The 1980 policy seems like a slight easing.
A bit. It leaned towards more capital-intensive development, kind of quietly allowed big firms to expand capacity, less emphasis on employment, allowed foreign investment tied to tech transfer, raised the MRTP limit. Big business generally liked it.
And then the Big Bang, the New Industrial Policy, NIP, 1991, part of the LPG reforms. What triggered that seismic shift?
The 1991 economic crisis, plain and simple, needed an IMF bailout, which came with conditions for structural adjustment. NIP 1991 was central to the whole reform package, a radical break from the past state-led model, aimed for much faster growth, integrating India globally, boosting competitiveness, addressing past distortions.
What were the absolute killer features of NIP 1991 that changed the game?
Delicensing was huge. Freedom from industrial licensing just swept away the need for licenses for most industries. Opened the doors for private investment without needing prior government nod, except for a handful of strategic or sensitive sectors.
And foreign investment policy flipped completely.
Totally. From restrictive to welcoming. Automatic approval routes for FDI opened up in many sectors. The Foreign Investment Promotion Board, FIPB, was set up for single-window clearance. Though it's gone now, it was key then. Result: a massive jump in FDI inflows, crucial for capital, tech, know-how.
Public sector policy also got a major overhaul.
Yeah, the focus shifted to efficiency, financial performance. Strategies included letting PSUs raise equity from markets, putting performance pressure on them, and explicit policies of disinvestment and privatization to reduce government ownership and bring in market discipline. This is still ongoing, always debated.
The source mentions the National Investment Fund, NIF, and how proceeds were used.
Initially, only the income from the NUF, built from disinvestment money, was used for social schemes. But during a crunch period, 2009-13, they allowed all the proceeds to be used directly for specific social programs as a temporary measure.
It also clarifies CPSE classification.
Central public sector enterprises, where GOVT has 51% stake, split into strategic, defense, atomic energy, rail transport, and non-strategic. The policy direction, especially with Atmanirbhar Bharat, is to minimize government presence in non-strategic areas, maybe limit CPSEs to just 4 strategic sectors, and merge, privatize, or put others under holding companies. Use the money for government programs.
Labor law reforms, another piece of the puzzle, the move towards codification.
Right. Trying to simplify the maze of old laws into codes. The Code on Occupational Safety, Health, and Working Conditions, 2020 focuses on safety standards, hours, leave, contract labor, grievance handling.
And the Social Security Code, 2020 aims for broader coverage.
Yeah, consolidating 9 old laws is one goal: simplification. But the bigger aim is extending Social Security pensions, insurance beyond the formal sector to cover unorganized workers too. Potential benefits: easier business compliance, more formalization, maybe more flexibility in hiring, though that's debated, better dispute resolution.
MSMEs, micro, small, and medium enterprises, often called the backbone, right?
That's their story. Huge for jobs, GDP contribution, innovation. But they face constant struggles. Access to finance is a big one, adopting new tech, reaching markets. The source lists many ministry schemes to help PMAGP, TMSE, credit guarantee, cluster development, MSE CDP, support for traditional industries, SFU, RTI, skill development, etc.
Any recent initiatives for MSMEs?
Udyog Aadhaar Memorandum, UAM, from 2015, simplified registration, made it online, easier access to schemes. An employment exchange for industries idea was floated under Digital India, and a framework for banks to help distressed MSMEs with revival plans.
Special Economic Zones, SEZ, specific zones to boost exports and investment.
SEZs, yeah. Geographically marked areas with more liberal economic laws than elsewhere. Goals: boost exports, attract FDI, create jobs, develop infrastructure. They offer tax breaks under the SEZ Act 2005. The Baba Kalyani Committee in 2018 suggested shifting focus from just exports to broader employment economic growth, and maybe having different rules for manufacturing versus service SEZs.
The manufacturing sector itself has some ambitious targets.
The National Manufacturing Policy, 2011, aimed high. 12-14% growth, 25% GDP share by 2022, 100 million extra jobs. Big goals. But implementation faced hurdles: land issues, bureaucracy, patchy infrastructure, logistics costs.
Make in India 2014 is the big banner initiative here.
It is. Promoting India as a global manufacturing hub, multi-pronged. Improving ease of doing business, liberalizing FDI further, developing infra, skilling workforce, pushing tech, key parts. More automatic FDI routes, developing major industrial corridors like DMIC, BMEG, CBIC, etc. to create integrated manufacturing ecosystems.
And the production-linked incentive PLI schemes are a more recent major push.
PLIs are significant. They offer financial incentives based on incremental sales of domestically manufactured goods. Covers 14 key sectors. Aims to boost efficiency, scale, competitiveness, production, jobs, growth. They're underway now, and importantly, MSMEs are getting benefits too. Sectors chosen strategically for future potential.
Can you give examples of specific PLI schemes mentioned?
Sure. Specialty steel for value-added steel used in auto, defense, etc. Textiles, focusing on MMF fabrics, garments, and technical textiles. Big potential for jobs investment. Food processing industry, PLI-SFPI, incentivizing manufacturing, promoting innovative SMEs, supporting branding abroad. Plus a separate PLI for millet-based products launched FY23, boosting processing Indian brands globally. Electronics manufacturing has several PLIs, large-scale, IT hardware, component semiconductors, specs, clusters, EMC 2.0, plus the big semiconductor mission, $10 in incentive to build a domestic ecosystem. FDI is wide open here, 100% auto route.
And electric vehicles, EVs.
Promotion steps are listed, maybe not a single PLI for EVs label. Things like increased demand incentives for E2-wheelers under FAME scheme, GST cuts on EVs to 5%, and chargers to 5%. FAME itself is key for driving adoption.
Chemicals, pharma also covered.
Chemicals and petrochemicals focus on domestic production, exports, energy efficiency, renewables, green hydrogen mission support, attracting global investors. Pharmaceuticals, India is already huge in generics, vaccines, strengths, talent, R&D, cost, challenges, quality control, IP issues, balancing generics IPR, price pressure, environment. PLI aims to boost domestic making of key starting materials, KSMs, intermediates, DIs, active ingredients, APIs, reducing import dependence.
Industry 4.0, the next big wave.
Right. Automation, data exchange, cyber-physical systems, merging digital and physical in manufacturing. India's widespread internet access, 60%, and the push for semiconductor self-reliance are key pillars for this.
Challenges and opportunities with Industry 4.0 for India.
Challenges. Need skilled workforce, infra upgrades, affordable tech access for smaller firms. Opportunities. Huge potential for productivity gains, achieving Atmanirbharta, maybe even global leadership in advanced manufacturing. Wrapping up industry. The source notes growth was decent in FY23 despite global issues, helped by domestic demand, credit growth, MSME support, ECLGS. Manufacturing benefited from FDI, easing input costs, rising capacity use. PLI schemes offer future promise, though risks remain.
Okay, that's a solid picture of industry. Let's pivot now to the services sector, which is really the dominant force in India's modern economy, isn't it?
Absolutely. Its growth has been phenomenal, really broad-based. It's the biggest magnet for FDI, attracting something like 60% of total inflows, and employs a huge chunk of the workforce, around 33% and growing.
And India punches above its weight in global services trade.
Yes. The source notes India has positive net services receipts, meaning our services exports are worth more than imports. That's really crucial for our balance of payments.
E-commerce is exploding within services.
Definitely a sunrise sector. Market size projections are huge, $111 billion by 2024, maybe $200 billion by 2026. And the mix is changing fashion, grocery, general stuff, making up more of the pie.
And the driver is digital access.
Largely, yes. Massive smartphone and internet penetration. India is the second biggest smartphone market, loads of users. The pandemic definitely accelerated online shopping habits, too.
How is this being regulated? Policy?
There's a draft national e-commerce policy trying to create a framework. It has to work alongside rules like the Consumer Protection, E-commerce Rules 2020. Those mandate things like full cost breakdown apply to Indian and foreign sellers. Policy aims to tackle stuff like deep discounts, platform neutrality.
Insurance sector, another T service.
Covers life and non-life general. IRDAI is the regulator. Source highlights the Agriculture Insurance Company, AIC, focused on crop insurance, promoted by PSUs like GIC and NABARD. Also mentions DICGC for bank deposit insurance.
And government social security schemes often use insurance.
Right. Leveraging bank insurance networks. Linked to financial inclusion like PMJDY. Schemes like PMSBY, accidental cover low premium, and PMJJBY, life cover low premium, provide basic safety nets accessible via bank accounts, funding usually shared center state.
Tourism, huge potential for India.
Massive potential across domestic, inbound, outbound travel. Medical tourism gets special mention $3 in industry. Why? Top hospitals, qualified staff, affordable costs, alternative medicine reputation, wellness demand, governments promoting heal in India. Ecotourism also highlighted benefits for conservation, education, local communities, protected areas.
What government initiatives support tourism?
Swadesh Darshan, theme circuits, Prashad, pilgrimage sites. A draft national strategy covers MICE, promoting meat in India, medical and wellness, Heal in India portal, rural tourism, clusters, digital tech, the SAFI for hospitality safety standards, loan guarantees for COVID-hit businesses, Incredible India 2.0 from niche markets, RCS UDAN expanding regional air links, including tourism spots.
Telecom sector, absolutely fundamental for the digital economy.
Critical enabler, high overall teledensity, 82.46%, though urban is much higher than rural. Massive mobile smartphone user base, second largest market. Big FDI attractor, 6%.
The National Digital Communication Policy 2018 had big targets.
Ambitious ones. Digital sovereignty, boost sector's GDP share to 8%, climb ICT index rank, broadband for all, 50 MEPs target.
Still facing challenges, though.
Yes. Digital divide persists, rural infra lagging, intense competition, high spectrum fees compared to elsewhere, less spectrum available overall, long-running AGR litigation cause stress, and 5G rollout needs huge investment.
Government pushing 5G.
Actively, 5G form setup, R&D funding. But challenges noted by a committee, import dependency for equipment, though 5G is a chance for domestic makers, need for much more fiber connectivity for rollout. But the potential benefits of 5G are transformative IoT, smart cities, smart farming, telehealth, remote procedures, huge possibilities.
E-governance leveraging tech for better public services.
That's the goal. Umang app is key single-point access to thousands of central state services, facilitated DBT, COVID services, millions of users, part of the broader Digital India push.
And ONDC, a different approach to e-commerce.
Open network for digital commerce. Network-centric idea, not platform-centric. Aims to democratize it, make it more inclusive, accessible, especially for small businesses, give more choice. Still in early stages, beta. OpenForge mentioned too, collaborative platform for eGov software development.
Okay, we've covered industry and services. Let's turn to the physical foundation infrastructure development.
The absolute backbone. Historically, pre-91, government pretty much did it all. Roads, rail, ports, power.
That changed dramatically after the reforms.
Big shift. Realization that government alone couldn't fund or manage the massive infra needs. So policy shifted to actively involve the private sector, leverage their investment, expertise, efficiency to bridge the gap.
What are the broad categories of infrastructure?
Economic infra supports economy, directly transport, energy, comms, and social infra, quality of life, health, education, housing, water. Functionally, transport, energy, communication, water sanitation, social.
The India Infrastructure Report 2023 focused on urban planning.
Yes, a collaborative report. Critiqued existing urban planning, advocated dynamic city building, emphasized financial sustainability for urban local bodies, ULBs, highlighted role of PPPs and municipal bonds for urban finance, a key resource for policy folks.
Common challenges in infra development persist.
Funding, always a big one. Implementation hurdles, land acquisition, clearances, regulations, and often neglect of maintenance once built.
NCIIPC is mentioned for protecting critical information infrastructure.
National Critical Information Infrastructure Protection Center, under IT Act, focuses on protecting vital systems, power, transport, banking, telecom from cyber threats.
Financing infra needs specialized institutions, NABI FID, IDFs.
NABI FID, National Bank for Financing Infrastructure and Development, set up by Parliament Act 2021, a DFI specifically for long-term infra finance. Does direct indirect lending, facilitates private investment, offers products like takeout finance, credit enhancement, lending to NVITs, source notes significant lending already. Infrastructure debt funds, IDFs, are vehicles to channel long-term funds from insurance, pension funds into infra. They mostly refinance existing bank loans, freeing up bank capital, can be trusts, IDF-MFs, SEBI-regulated, or companies, IDF-MBFCs, RBI-regulated.
National Investment and Infrastructure Fund, collaborative platform JOI invests alongside international domestic investors, specifically to channel funds into infra projects.
Specific zones for manufacturing NMMZs.
National Investment in Manufacturing Zones, part of the NMP 2011, aim integrated industrial townships, promote investment, create jobs, transform India into manufacturing hub, encourages public-private participation.
And industrial corridors are similar planned zones. Planned regions for industrialization, economic growth, infra development along major transport routes. Examples: DMIC, BMSC, CBIC, Vizag Chennai, ECEC Phase 1, AKC, developing networks of roads, rail, ports, industrial nodes.
SEZs versus industrial park source gives example.
Yeah, lists examples. SEZs like Adani ports or VSEZ are specific liberalized zones. Industrial parks are planned areas, often sector-specific like Hinjawadi IT Park or Electronic City or general like SIPCOT.
Global context, the Global Infrastructure Outlook, GIO.
G20 initiative forecasting infra needs gaps to 2040. Puts India as second largest market after China, huge needs here. Global gap, $15 trillion. Electricity and roads dominate needs globally.
Road transport, massive network in India.
World's second largest. National highways, central ministry, state highways, state culverts. Maharashtra has longest length of both. Investment mix, budget support, private sector, IEBR.
Key government measures for roads.
Farat Poriana, big umbrella program for connectivity, efficiency, economic corridors. Setu aimed to remove railway crossings on NHs. Chardam Mahamarg Vikas Paryojana, upgrading highways to Uttarakhand shrines. Motor Vehicles Amendment Act 2019, stricter penalties. Safety Board, recall power.
PM Gati Shakti, the integrated planning approach.
National Master Plan, breaks down silos. Digital platform for an integrated planning, coordinated execution across ministries, incorporating schemes like Saratmala, Sagarmala, UDAN, focus on multimodal connectivity, first-last mile.
Benefits and challenges of Gati Shakti.
Benefits: unified approach, synergy, lower logistics costs, timely projects, better ease of living doing business. Challenges: coordination, ministries, states, funding, land acquisition, environment, social impact. Way forward: efficient management via platform, PPPs, skilling, sustainability, community engagement.
Railway's huge network, but facing challenges.
Fourth largest globally. Contributes 1% NI, major organized sector employer. Challenges: capacity constraints, congestion, service quality issues, financial stress, declining GDP share. But huge potential investing in rail could boost growth significantly.
The high-speed rail bullet train project, prominent but debated.
India's first HSR, Mumbai-Ahmedabad, framed by some as nation-building, adopting advanced tech. But source includes the debate point: huge upfront costs versus modernizing the vast existing network serving millions or funding social sectors. Requires looking at long-term benefits versus immediate needs.
Models for railway modernization and station redevelopment. PPPs involved.
Size BOT, mentions annuity, hybrid annuity, HAM risk sharing, toll operate transfer, TOT private runs existing asset. Also engineering procurement construction, EPC GOVIC contracts outbuild then owns operates. Notes a shift to EPC for redeveloping major stations like Mumbai, Delhi, Ahmedabad recently, away from pure PPP, BOT for those other models mentioned. Foreign GOVIC collaboration, Swiss challenge.
And the need for a railway development authority, RD.
Source argues for an independent regulator to ensure orderly development, competition, protect users, investors, addresses issues like politically influenced fares, freight, cross-subsidizing passengers, RDA role, tariff setting, performance standards, investment advice, investor protection, dispute resolution.
Ports vital for trade given the coastline.
Crucial. 12 major ports, 200 minor, handle 90% exam trade volume, big economic impact, boost city-state development, jobs, value addition, investment, tax revenue, source data, 1 ton throughput, $100 value add, 1 M-ton, 300 jobs. Need to leverage coastal assets.
Government initiatives for ports.
Major Port Authorities Act, passed 2019, gives major ports more autonomy, tariffs, asset use, aims for efficiency. Recycling of Ships Act 2019 aligns with international standards, prohibits hazardous materials.
And Sagarmala focuses on port-led development.
Flagship program recognizes past underutilization of port proximity, aims for comprehensive development to cut logistics costs, boost port capacity, promote port-led industrial growth. Focus areas: connectivity, road, rail, air, ports, coastal economic zones, smart cities, island development.
Airports, significant PPP involvement.
Yes, several airports developed operated via PPP. National Civil Aviation Policy, 2016, aimed for safe, affordable, sustainable air travel. Boosted regional connectivity, fiscal support, infra. Key change: revised 520 rule to 020 for international flights. Just need 20 aircraft now, not 5 years ops.
UDAN scheme drives regional connectivity.
Medan Udebeshka Nagrik. Regional connectivity scheme uses viability gap funding, VGF, to connect underserved airports, make flying affordable. Integrated with Gati Shakti.
Logistics sector, critical for efficiency, but costs are high in India.
High logistics cost, 18% of product cost versus 12% China, 12% Europe, is a major drag on competitiveness. Need integrated transport. Multimodal logistics parks, MMLPs, are seen as a solution, offer freight aggregation, multimodal options, warehousing, value adds, customs, in one place to cut costs.
National logistics policy aims to tackle this.
Goal: reduce logistics costs to single digits, global benchmark, by 2030. Aim for top 25 in Logistics Performance Index, LPI, by 2030. Data-driven decisions. Impact: boost trade, self-reliance, help farmers, cut losses, better market access income.
And India's LPI rank has improved.
Significantly. Ranked 38th in LPI 2023, up from 44th in 2018, 54th in 2014. Positive trend. LPI 2023 measured trade speed for the first time.
Improving agri-produced transport links back.
Definitely. Issue is over-reliance on road, 97.4% versus rail, 1.9% for perishables. Need shift to rail. Measures: infradev, tech, efficient logistics, farmer empowerment, one nation, one market, digital agriculture, mission help here. Dalwai Committee recommendations on post-harvest infra, market intelligence, FPOs, e-commerce, climate smart tech are relevant too.
Public-private partnerships, PPPs, widely used, different models.
Yes, arrangements for infra development. Models mentioned: BOT, annuity, AJM, hybrid annuity model risk sharing, Govy pays fixed annuity during construction plus rest over time, TOT, toll opera transfer private, runs existing asset, collects tolls. VGF, viability gap funding, is Gov grant to make projects bankable.
The VJ Kilker Committee reviewed PPPs.
Make key recommendations: guidelines for Gov audit private books, transparency, monetize viable projects, divest equity, explore long-term finance options, deep discount bonds, develop a national PPP policy, maybe as law, for clarity and predictability.
PPP is used beyond big infra, too. Skilling, health, housing.
Yes, some skilling education. TVET programs, often PPPs for industry relevance. CSR investments contribute. PMKVY, skill dev scheme, implemented via PPPs. Healthcare, potential to mobilize private funds expertise, enhance rural reach, adopt tech, telemedicine, examples. Ayushman Bharat uses private hospitals, state schemes, telemedicine projects, NCD partnerships, affordable housing. PPP seen as a way to tackle urbanization challenges, land, cost, policy, by leveraging private efficiency.
But PPPs face general challenges.
Common ones: risk allocation disputes, financial viability if revenues fall short, delayed government payments, land acquisition clearance delays, regulatory uncertainty. These can hinder projects.
Right. We've covered an incredible amount of ground from the very foundations of the economy through industry, services, infrastructure. Now, to bring it all together, let's widen the lens to India's global interactions and the absolutely crucial dimension of sustainable development.
It's essential, isn't it? You can't look at domestic economy in isolation anymore. Global links and sustainability are intertwined. The source takes us back to the Bretton Woods Conference in 1944 as a starting point for global institutions.
Bretton Woods set up the post-war financial order.
Pretty much. Established the IMF to oversee fixed exchange rates, pegged to the dollar then, and offer short-term aid for balance of payments problems. And the IBRD, which became the World Bank, focused on long-term reconstruction and development loans.
What are the IMF's core objectives and structure?
Objectives: global monetary cooperation, financial stability, balanced trade, promoting high employment, sustainable growth, reducing poverty. Structure: Board of Governors, one per country, Executive Board, day-to-day, ministerial committees.
And India's role in the IMF.
Our finance minister is the governor, RBI governor's alternate. We're part of a constituency on the executive board. Our quota determines voting power and how much we can borrow.
The World Bank, IBRD, focuses on long-term development.
Yes, its main job is long-term economic development and poverty reduction through loans, grants, technical help for projects in member countries.
The AIIB is a newer player where India is significant.
Asian Infrastructure Investment Bank, yeah. India is a founding member, second largest shareholder of 7.6% after China, 26.6%. And India is the biggest recipient of AIIB funding so far. The source notes India stresses AIIB is non-political, respects sovereignty, addressing, perhaps implicitly, commentary about China's influence.
The WTO governs world trade, its origins and principles.
Evolved from GATT, 1947, via the Uruguay Round, 86-94. Created Jan 1st, 1995. Key differences from GATT array: permanent organization, binding dispute settlement, covers services and IP2, regular policy reviews. Principles: non-discrimination, MFN treat all members equally. National treatment, treat imports like domestics once inside. Reciprocity, transparency, binding commitments.
It has special and differential treatment, S&D, for developing countries.
Provisions meant to give flexibility, tech help, longer timelines for developing LDCs, to integrate and pursue development goals, give them more voice. Criticisms: often vague, criteria unclear, sometimes non-binding, might create dependency. India is a developing country member.
Specific WTO agreements mention ITA.
Information Technology Agreement eliminates tariffs on IT goods. Source says India not participating in ITA expansion talks currently, citing focus on domestic electronics manufacturing, PLI, etc. Also TRIMS, trade-related investment measures, deals with investment rules that distort goods trade. GATS, General Agreement on Trade and Services, Framework for Services Trade, 4 modes of supply, and TRIPS, trade-related aspects of intellectual property rights, Comprehensive IP Agreement, patents, trademarks, etc.
IPR in India is a big topic.
IPR's rights for creations of the mind. Indian Patents Act 1970 is key. Section 3 is famous, requires new forms of known drugs to show enhanced efficacy to get patented, helps prevent evergreening, promotes affordable generics.
But India faces international pressure on IPR.
Often does, especially on patents, access to medicines. Compulsory licensing CL concerns foreign investors, impacts trade talks sometimes, like with EU. India often on USTR's priority watch list, alleging weak IP protection. India maintains its laws are TRIPS compliant and balance rights with public health.
Which links to generic drugs and compulsory licenses, CL.
Generics are cheaper copies of branded drugs. CL allows government to authorize generic production of a patented drug under certain conditions. Public health emergency, anti-competitive practices. TRIPS allows CL, Article 31. Doha Declaration, 2001, reaffirmed right to use TRIPS flexibilities like CL for public health, vital tool for affordable medicines.
The Doha Development Agenda Round focused on development.
Launched 2001, India pushed for development focus. Rich countries, opening markets, cutting farm subsidies, sought solution for public food stockpiling for food security. Opposed adding new issues, investment, competition policy. But the round stalled, largely over agriculture disagreements, never concluded.
Regional trading blocs, different types.
FTA, free trade area, internal barriers down, own external tariffs, India, Sri Lanka, CU, customs union, internal free trade plus common external tariff, EU, common market, CU plus free movement of labor capital. SICA are comprehensive FTAs including services, investment, India, Singapore.
RCEP, India negotiated but opted out.
Regional Comprehensive Economic Partnership, big regional FTA. India was in talks, but decided not to join in the end. Concerns about impact on domestic industry augury from imports, especially China. RCEP signed NOV 2020 without India, effective Jan 2022 for members. A major decision for India's trade stance.
Okay, global structures covered. Now finally, sustainable development and environment increasingly critical.
Can't separate them from economy now. Source points to the 1992 Rio Earth Summit as a turning point.
Rio prioritized sustainable development.
Yes, UN Conference on Environment and Development aimed to integrate environment and development, devise action plan, affirm sustainability was achievable.
Global environmental institutions support this.
Green Climate Fund, GCF, under UNFCCC, helps developing countries with climate action, mitigation, adaptation. Global Environment Facility, GEF, founded pre-Rio, funds projects on biodiversity, climate change, pollution, etc. in developing countries. Adaptation Fund, under Kyoto Protocol, funds adaptation in vulnerable developing countries.
The SDGs provide the universal framework.
Sustainable Development Goals, 17 goals, 169 targets, Agenda 2030. Universal call, end poverty, protect planet, ensure peace, prosperity. Interconnected goals. India's SDG India Index, NITI Aayog, is unique, first government-led subnational SDG tracker globally. Monitors state UT progress.
Climate change performance is tracked. India has plans.
Climate Change Performance Index, CCPI, ranks countries on climate protection efforts. India has its National Action Plan on Climate Change, NAPCC, domestic framework, with national missions for adaptation mitigation.
Sustainable practices back in agriculture are vital here.
Absolutely. Using renewables for irrigation, biofertilizers, climate-smart practices all reduce environmental impact, soil degradation, water use, climate change. Managing waste, manure, processing waste, food waste, sustainably is also crucial to avoid pollution, emissions. Extension services promote these.
Energy and environment, a major intersection. Fossil fuels versus green goals.
Critical nexus. Fossil fuels dominant but drive warming. India committed a green path, recognizing disproportionate impact on poor. Clean energy cess transition to GST cess, big goal. 50% energy from non-fossil fuels renewables by 2030, COP26. Net zero target by 2070.
Renewables push. Solar, wind, biomass.
Solar, huge potential, costs falling. Wind, good potential, policy support. Biomass, from plants waste, promotes afforestation. Government push via RPOs, renewable purchase obligations, mandating purchase of renewable or RECs, schemes like solar parks, Pudla, Shakti Stala, solar pumps, solar cities, International Solar Alliance, ISA, co-founded by India, national policy on biofuels.
Hydropower, energy efficiency also matter.
Hydro helps meet peak demand. Energy efficiency, R&D, and adoption across sectors is key. Promoting natural gas over oil is another cleaner step.
Coal sector still big, but challenges. Reforms.
Challenges. Mining tech, costs, environment. Reforms. Coal India, Ltd, 1975. Coal Mines Act, 2015, transparency. UMPPs, Coal Mitra Portal, SHATI scheme allocation. Private participation encouraged. Source prompts thought on India's low per capita energy use, energy poverty versus global average. Asks about schemes, home power generation ideas.
Oil and gas sector policy promotes exploration production.
Framework aims to boost E&P, open acreage licensing, data access, more freedom for national oil companies, early monetization, incentives, marketing pricing freedom, tech, National Gas Grid Building Pipeline Network. PNGRB authorizes city gas distribution.
Wow, okay. We have really covered a huge amount of ground in this deep dive, navigating through these really comprehensive notes on the Indian economy.
It's been quite the journey, hasn't it? From the history of land reforms, the nuts and bolts of agriculture through industry, services, the vital infrastructure, and then looking outwards to global institutions and sustainability.
And hopefully for you listening, you can really see how understanding these connections, not just facts in isolation, but the policies, the schemes, those stubborn challenges, the data points, the why behind it all, is absolutely vital for your UPSC preparation. That was the goal here, right? To give you that interconnected view from this source material.
Exactly. Each point we touched on could be a whole study area in itself. But seeing how, say, land issues connect to migration, which connects to urban infrastructure needs, or how agricultural finance impacts food processing, that's where the deeper understanding for the exam really comes from.
Right. So as we wrap up, maybe one final thought for you to mull over, something drawing together a few threads we've discussed. We talked about those persistent rural challenges, land fragmentation, agricultural labor issues driving migration.
And we also talked about the booming services sector, the push for smart cities and urban infra, alongside efforts for sustainable rural development, digital tech in villages, strengthening FPOs.
So here's the thought. How might the future balance or maybe tension between investing heavily in strengthening rural economies sustainably, using tech, empowering farmer groups, versus the continued momentum of urban-led growth and infrastructure? How might that ultimately shape migration patterns, resource distribution, and the quest for truly equitable development across India?
Something complex to consider as you continue putting the pieces together from your studies.
Absolutely. Well, thanks for joining us for this deep dive into India's economic landscape.